Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, June 19th. A couple items here on the economic calendar. We'll start off with the housing starts for the month of May. So as you can see, back in April, we had a pretty good month here at 1.286 new construction for housing. Forecast was supposed to go up to 1.3, and they exceeded that to 1.35. So we had a roughly about 2% forecast, and it jumped up to 5%. So a good start for housing starts here. However, we get the future by looking at the permits here, building permits for the month of May and April at 1.364, and it dropped to 1.301. So that was a 4.9, I believe, or 4.6% drop. So that's something we're going to want to keep our eyes on to see if that's going to improve over the summer here. As obviously that is the future. We want to see if housing continues to grow, which benefits us all, especially when there's a lot of demand for it. So let's kind of jump ahead here with the headline news. Stock market is down. It's not due to obviously the economic news. It's all basically because the trade war with China appears to be escalating. So as you may recall, we had $50 billion tariffs applied last Friday. China came out with their $50 billion. Now President Trump said he wants to come out with another $200 billion. And then he even has another 200 behind that if they retaliate to that 200 billion. So it's just going for a tit for tat, going back and forth with one another, which obviously they're going to do it. I mean, it's almost a given that they're going to go ahead and retaliate. So this is obviously going to be a bit larger, and this is of course worrying the markets right now. Dow is currently down over 300 so far this morning as a result. The other ones aren't taking it quite as hard, but the Dow is the one that's really, as it's obviously with the bigger conglomerates that's out there, so it's going to affect them a bit more, especially when they're hoping to have a expanding market, and with GDP forecast to slow down towards the end of the year, this is not obviously good timing in their minds. So let's kind of jump ahead here, see how this is affecting the bond market, which it's benefiting. So we had the 50-day moving average. It's been a tough fight trying to get a break above it. We finally broke above it today. We're currently up about 13 basis points, which translates to better pricing for interest rates today. Obviously, good news for those who are looking to refinance or buy. If we could stay above this will help us out further. We have a little bit more room before we get the next ceiling of resistance, which is this Fibonacci number here, right here. And again, as you can see, we got the 200-day moving coming down further down. So as we tested about 2 weeks ago, we tested and we came back down. So we had this little downward trend here. So just be a little cautious. We're getting into some nice territory here. But again, as we get to these areas, you got to be a little cautious as it goes. But again, this trade escalation could last a while. So it's hard to say if something else might take our minds off, the investors' minds off of that. And, again, and have a downward trend here again. So be cautious here. We got a 10-year Treasury. 10-year Treasury is heavily trying this 100-day moving average. And again, if it can break it below this will give us a lot of room to the downside, which will help interest rates improve more dramatically. As you see, when it was way down here, this is when we were at this level here. So if we can get back down to somewhere on this level, this will obviously help out interest rates that much more, as we had a nice 1 day basically improvement. So rates actually in the fours. So anyways, I hope you guys have a great rest of your day. If you guys want to come over to Twitter, you can follow me on Twitter. If there's anything that pops up during the news day, I do post it up there. Otherwise, you guys have a great rest of your day. Thanks so much for watching. I look forward to see you guys tomorrow. Bye-bye.